Hello traders, welcome to a post-session review. Today is Tuesday, October 1st, and we're taking a look at the mustard seed account here. I don't have any trades on the longer term yet. Had some things that we're kind of setting up, but today's volatility really threw things for a loop. So we'll have to regroup on that. I guess we'll talk about more about that in the live stream tomorrow. But for today, I had only one trade today. Was looking to get into a second trade, but price didn't make it there. We'll talk about that as well. And then the market just went a little chaotic today, based on some PMI, I think, or something like that, news that came out. But one trade, $175 here. It's about 35 points or something like that. We had another gain here, so the account balance is 335431. 335431, penny for penny. $175 gain here. Yesterday we had a break-even day with two break-even trades. Ended up with about 5 points minus commission. And then here, so it looks like we're starting to string more winning days here back to back, and that's good for our account. On the equity curve front, we're looking good. We've made another new structure high. Looking for that to continue, and we'll keep growing this account. That's the focus. The focus is only to grow it, not to recover, not to do anything crazy. Our goal is just to keep growing the account. If you keep that in mind, you don't lose your focus. You don't get into any emotional turmoil, because the goal is simple: follow a trade plan to grow the account. That's always the goal. All right, so we'll minimize this and we'll talk about that trade. The day was a pretty simple order flow for the most part. We had here the market produce an expectation failure here, and from that the market did start to keep making new structurals and lower highs. Here we had a complex correction which broke expectation to the upside. So at an expectation failure here, I was looking to get long. Okay. This was right at the market open. I did not engage there, and as the market came back up to test these highs and the sellers came in to defend, they came down here. And when I saw the rotation in price where I expected it to happen, I went ahead and jumped in. I got a bad fill on that. As you can see, I engaged when the candle closed, but the was a little surge there, and I got filled there, and I trailed at the 1-to-1 to the upside. I'll show you that. We had a very deep correction, so the 1-to-1 kind of had us going here, and then the market had trailed on the decision candle. At that point I was here, and then we had a couple of back-to-back candles, so I didn't feel the need to move it. I just stayed there, as these were kind of inside candles, and that's fine. I ended up taken out here, and then the market went up a little more. The trade that was on my radar was a bat pattern that was setting up. But let me talk to you a little bit about that, since we've been a little more on patterns lately. Just wanted to show you where that comes in. Let me okay, so the bat pattern would have completed up here. It was on my radar. It was not a pattern that I was too interested in, although price never really got there, and we had a really violent reaction to the downside, and the market just kept selling and selling and selling on some fundamental news that came out around 10 o'clock or so, or in or around here. It was just crazy. I was looking to take an aggressive short here, and I was planning to manage this trade as a break even, very aggressive trailing here, because the expectation was against that. This is one of those patterns that we find that are against the order flow, but you're trading the D in a correction. You remember, I always tell you guys, what is it that you're trading? Okay, if you're trading the pattern, you're trading the pattern. If the pattern fits the order flow, the expectation of the pattern, let's say this was an inverted pattern and we're looking for D with the expectation of a new structure low, and that's an even better pattern that fits what the market is working towards, and that pattern would have the probability of giving you some extended targets, and you can manage that trade with a little more laxity. And when we get into these patterns and I make these videos on these patterns, which I promise you will be soon, I'll talk about, patterns and how they fit the order flow and your two options as far as managing these trades. But nonetheless, the market never got there, never sold off there. It was a really good area to look for the short, because there was good structure here going back. The 1597 was a really good area for structure. We had a really pretty symmetrical, nicely defined pattern. And what adds value to these patterns is their B leg. So that B leg is pretty much going to give you the strength of the pattern. If that B area is respected to the ratio, it adds even more value to that C to D. So the more precise that pattern conforms to its core rules, then the stronger the setup is going to be at D. Okay, especially if you have confluence there, and even better if you have it fitting into the order flow, meaning what the market is working towards. But we never got there, never got filled, and then after that it was just all downhill, no real corrections to speak of. So I just made the decision I wasn't going to play into their game, play into the volatility, and I was just going to let it be. Tomorrow's another day. No sense getting overly aggressive, because the problem here is where do you put your stop? And there was just nothing to really work with there. Nothing really started remotely qualifying until price started getting down here, and then it was just not something. After we got this move to down here, I just said, you know what, forget it. Tomorrow's another day. Didn't quite catch that by a few points, and I just made the decision that I wasn't going to trade anymore, and I went on about my day. But that's pretty much the trade for today. I wanted to share that pattern with you. This one is something, there was a Gartley here that failed also. I'll point that one out as well. Here we have a proper anchor leg, right, that fits the order flow, meaning that we have a higher low into a new structure high. The market's overall expectation from here will be a higher low and a new structure high, right? Slightly longer term, we can see that the market had a high here, had a complex correction, then we had a new high here, and then we have a higher low and then another high. We're expecting for this market to make a higher low and a new structure high. So this would be a better pattern setup, only that pattern ended up failing as well. So let me go to the drawing tools here, go to our tool here, and go here to the high, to the low. Oh, sorry, here, and then this was the PRZ to that Gartley. That ended up not materializing and failing. So that's pretty much what we have today on the front. And it's not uncommon to see patterns within patterns, or back-to-back patterns, or patterns within legs of other patterns of a larger scale. But you have to keep all that in context, and you have to understand what you're trading, and you have to understand what are the boundaries of that pattern, because if that's what you're trading, your stop has to be where that pattern dictates it needs to be. Otherwise, you're putting yourself in a vulnerable situation, and you're trading a mixture of order flows, and it just usually doesn't work out that well unless you have a tremendous amount of structure that can, where you can tell yourself, well, if I'm right about this, price should not get below this, and that may offer you slightly better stop placement. But at the end of the day, these patterns have specific rules for a reason, because these things have been tested over time, and the stop goes where it needs to go. Okay, nothing wrong with using a longer term order flow pattern for confluence, but if you're going to trade that D, you got to put that stop on the right place. And on the longer term, you're usually not going to like the amount of points that you're going to have to put at risk there. So keep it in line with the order flow that you can afford. If there's a larger pattern and it adds confluence, great. But please understand what you're trading and understand where the stop needs to be, and you should be fine. Other than that, don't have much to add. Tomorrow's a live stream, very excited about that. We're going to focus on structure analysis, order flow analysis, and we're going to introduce the battle zone. You know, this is a territory. You know, these battles between buyers and the sellers is all over real estate. We're going to dive deeper into that tomorrow. I'm going to add, give you some other lessons here that are going to allow you, some further insight into structure and how structure plays a role, and how the expectation plays a role with structure. We're going to get into all that tomorrow. I think it's going to be a really cool live stream. Hopefully we'll have a profitable day, but if we don't, we're still going to do our best to follow our rules. And because of that, we believe that, you know, profits are just around the corner as long as we keep following our rules. All right? Well, that's about it, guys. Short and sweet. And again, I'm looking forward to this live stream tomorrow and continue with this mustard seed account. Okay? Thank you very much, and goodbye.